Let's get some business news now. Bring it all back down. Edward Boyd joins us. Ed, good morning to you. The local stock market absolutely wiped out yesterday on global recession fears. How likely is a recession now?
Well, investors are always trying to look 12 months ahead at what is in the future for the market. And clearly yesterday they were really worried about the chances of a recession probably around this time next year. And if you think about to June next year, interest rates are going to be substantially higher. They'll be around that 3% level, maybe 3.5% level. That's the cash rate. So remember, add on another couple of percent for a bank. So mortgage rates will be 5.5%, 6% even, which is a level we haven't seen for quite a few years in Australia. And there are a lot of concerns that there might be some people that may not be able to pay off those loans on their mortgages and need to sell their houses. We've got house prices starting to fall and it could trigger a bit of a recession. Now, right now, the chances of a recession aren't too high because we've got a central bank here that sets its policies, and we've got a government that's trying to help Australians with property in particular. So I think we're going to be okay, but clearly the market had a big freak out yesterday and dropped more than 5% at the open, wiping off about $115 billion from shares. It did come back a bit in the afternoon, but it was one of those days where investors were really concerned about global problems, including recession.
So hard at the moment for investors to hold their nerve, Ed. Now, tomorrow the US Federal Reserve will announce its June cash rate decision, so rates could be lifted by 0.75%.
0.75% is a pretty big increase from the US Federal Reserve. They have been very clear. Their chairman, Jerome Powell, has every press conference he hosts, which is every time he makes a cash rate decision, he basically says, next time around, we're going to do this. And he's constantly said it's going to be 50 basis points for this week. He'll make his announcement early tomorrow morning. But the speculation over the last couple of days is he may have to lift rates higher because the US inflation figures, we saw them come out on late last week. Inflation hit a new 40-year high in the United States. That's after the Federal Reserve raising the cash rate by 50 basis points. So he may have to go harder to try and bring down those inflationary pressures in the States.
And also tomorrow, Ed, the labour force numbers for May will be released. Economists are expecting the unemployment rate to fall to 3.8%.
It looks like it's just going to keep tracking down. So it's 3.9 at the moment, expected to go down by 0.1 down to 3.8. They're expecting about 25,000 jobs will have been created during the month. So I think this is what we're going to start to see most months now for the next sort of 3 or 4 months of this year. We're probably going to get down to around that 3.5, 3.4% mark for unemployment. And then when we get to that level, we'll be at full employment, which is what the Reserve Bank wants to see in our economy.
Okay. Ed Boyd, thank you. We'll talk to you soon.